Okay, this is a conversation that's all over social media and definitely all over my timeline. Today, we're going to talk all about funding your next level. Because here's the truth, you cannot scale a company on hustle alone. I don't care what any of these social media influencers tell you, it's not possible. You cannot grow on fumes, hope, or Instagram motivation. And you definitely can't reach 5 million, 10 million, or 50 million without capital strategy. See, growth requires fuel, and fuel requires funding. So, today we're breaking down the real world options for financing your business so you can scale intentionally, boldly, and without burning yourself into the ground. First, ask yourself two questions. Is my business fundable? And how do I make it fundable so that I can get the right amount of capital so I can make my power moves?
Welcome back to another episode of Mogul Chicks Chat. I'm your host, Adrienne Graham. I'm the CEO and proud founder of Mogul Chicks, and that's Chicks with an X. I am a serial entrepreneur and a self made businesswoman who is a strategic business growth advisor, talent management strategist, published author, mentor, investor, and podcast host. Mogul Chicks helps female founders grow and scale profitable, job creating companies and eventually get them investment ready. We also help groom them into dynamic leaders and CEOs and build legacy wealth in the process. Mogul Chicks is a mindset, a way of life, if you will, and a blueprint for female founders who want to build a legacy of wealth and a generational business empire. We provide strategic business growth solutions and a platform for resources, mentoring, networks, education, and media that shares our stories. Our mission is to take your company from flat to profit generating to job creating to investment ready. My personal mission is to help you build and run a better company, reimagine the way you do business, and build lasting wealth. Oh, and before I forget, make sure you tag Mogul Chicks using the hashtag Mogul Chicks Chat on social media. Make sure you rate the show and leave a comment. It helps people find us. Share the love, share the love.
Okay, let's get into it because this is a conversation that has been hot on the social media streets. Let me start with the mindset reset, the truth about capital, quote unquote. Access to capital is not a luxury, it's a business strategy. Most women founders, especially Black and Brown women, of course, have been conditioned to fear debt, avoid investors, distrust banks, and bootstrap until their bodies give out. Most know that the playing field is not level, which is a whole other conversation because I think there is a misconception, and I said this in a different episode, that because you're struggling or because your lack of capital is really hindering your growth, that you feel that you're ready to approach investors. That is the furthest thing from the truth. Here's the real truth. Undercapitalization is one of the top reasons that most businesses fail, especially women owned businesses. Not because their idea was bad or the founder wasn't capable or because the market didn't want the product, but because business didn't have the resources it needed to reach the next stage and it could not sustain the narrative that it was an investable company, meaning the investors couldn't see a path to profitability with the company or return on their investment. Capital is an accelerant, if you will. It's leverage, it's power, and you deserve to learn how to use it wisely. Everybody else shares their game, in the good old boys network. So I'm here today to help the ladies out. So let's start with the four pathways to fund your growth. Now, there are only four ways to fund a business. Everything else is a variation. So let's break them down clearly so that you understand. First pathway, debt funding. That's loans and lines of credit. Now, I'm not going to sit here and talk about business credit and fix your credit and all the other stuff. That is not who I am. That's not what I do. If you want a credit professional, I can refer you to one that I trust implicitly and nobody else. But these include business loans. SBA loans, lines of credit, equipment financing, working capital loans, and revenue based loans. These are all you can look these up, you can see what they are. And if you are in a real business, you know what these are. The debt is best when you want to maintain full ownership of your company. One thing people don't talk about is when you go out for investment dollars, you have to give up a piece of your company. We'll get into that later though. If you want to have strong business revenue, if you don't have someone else in your pocket, having debt funding is a good, well, I mean, I shouldn't say it's a good way, but I mean, you do have the loan provider in your pocket, but you don't have a bunch of different hands in your pocket. If you need predictable repayment schedule, knowing exactly when that monthly payment is due every month, this is your best option. And it's best when you're funding operations, inventory, or expansion. That is it. What I want you to remember is debt is not an enemy. Mismanaged debt is the enemy. And used correctly, debt builds infrastructure, hires teams, stabilizes cash flow, and gives you breathing room. You ever see on Shark Tank where, and I said this in another episode, where Kevin O'Leary or whoever says, "Well, I'll give you $100,000 plus I'll do 400,000 in debt financing," and the business owner is like, "Debt? What?" This is actually a good strategy. Pathway number two, equity funding investors. Okay. So this includes angel investors, VCs, venture capital, family offices. If you don't know what that is, I could do an episode on this later. Strategic investors and private equity, but that's for later stage companies. And there's pros and cons to all of these, but there's a lot more cons to private equity than pros. And I won't get into that for the purposes of this episode. Equity is best when you need a large capital injection, or you're entering new markets, or you want strategic partners, or you're building high growth or tech based models. This is not for my advertising company is not getting enough revenue and I need money to stay afloat kind of thing, or my salon is not getting enough clients, so I need more money to stay afloat. That's not what equity funding is for. So it comes with trade offs. Okay. And I've already said this. You give up a portion of your company of ownership. They want something in return. You must report to them consistently. It's like having a spouse that you have to report to your whereabouts. And investors are going to expect a return. They're not giving you money for their health. They're not giving you out of the goodness of their heart. They want their money to make money. Equity is not free money and expensive. It's expensive money, but it's powerful when it's structured well. And I need us to have these conversations more about this investment, equity investments, because people seem to put this narrative out there that, oh, you just get an investor, you get some money and you're good. No, that's not how that works. There's a whole lot of things you have to do in order to be qualified for investing. And if you don't understand, you can come to funding school or you could just buy the book, Mogul Chicks Guide to VC Funding. So let's move on to pathway number three. That's revenue power plays. So this includes pre-sales. So a lot of you, if you've written books, you've done that. You've pre-sold the book before it goes on the market, and software subscriptions. You start selling before it's ready to go live, and so on. There's paid wait lists. These are people who have already paid, kind of like pre-sales. I don't know. It's kind of redundant. Yeah. I don't like redundancy. Subscriptions. If you have a subscription model, that's recurring revenue. You get that every single month based on how many people you have in the subscription. There's licensing. Oh my God, how many times have I told you guys about licensing? Some of you are sitting on such powerful gold mines that you hoard it all to yourself, and you don't realize that if you licensed it out, you eliminate your stress and you get more money and your stuff is still put out there to the world. The only people who are not interested in licensing are the people who want to still be the stars of the show. I'm going to leave that right there. Strategic partnerships. You should be partnering if you have a recruiting firm, for instance, and an HR consultant who specializes in collective bargaining or compensation planning or total HR. You can add revenue by partnering up with that person. Productization. Now, I said for years I didn't have products. I had books, but I didn't have products. But I've been learning with this whole blockchain and tokenization and digital products, and not digital products. I don't really do digital products, but my apps and software that I'm developing, I was able to build products into my business. And some of you can do the same thing if you just take a step back and think about it and really document what you do and see what parts of that can be automated. You can turn it into products instantly. And then premium upsells. So for me, I have a network, the Mogul Circle, that I'm sure you guys have heard of before. And that's a high level networking circle that is an upsell. So it's like, okay, we've finished working together. I've helped you achieve your goals. Now, how do you move into other circles and try to partner with other women? The Mogul Circle's an upsell. Just That's just an example. So these are internal capital strategies that always allow you to create cash on demand without external financing. And it's preferable. If you can do that, that is a power play. Revenue power plays are perfect when you want to stay lean, you need immediate cash infusions, you want to avoid debt or equity, and your audience trusts you. Every company should have at least three revenue levels that they can pull proactively. Pathway number four, asset leverage. This is a little bit more advanced, and this is for the bigger dogs in the game, so to speak. This includes leveraging receivables. Did you know you could sell your receivables to companies that give you, but you have to pay a fee on it, but you still are able to get that money up front? Leverage your inventory. That's self explanatory. Leverage your intellectual property. What did I just say about licensing and stuff like that? Leveraging your equipment, leveraging your real estate, and leveraging licensing rights. I know that's kind of sounds redundant with intellectual property and licensing. No, it's not. But with your intellectual property and your licensing, I suggest you reach out to an IP attorney who can help you with all of that, because I am not an IP attorney yet. Most founders don't realize that they're sitting on monetizable assets. If you got a trademark or a patent, a system, data, content, a methodology, a customer base, software that you've built, a franchise model. Some people don't even think about franchise models, equipment or land property. You have something lenders or partners will fund against for your business. See, that's the problem. People don't have assets but want the funding, and they don't realize, or, well, no, let me rephrase. Some people have assets they do not realize that they have, but they go and shoot straight for funding without understanding the power and the leverage that they bring to the table. So, asset leverage is how businesses expand without draining the cash flow. So, which option is right for you? Let me move into a different mode here. Let's see. Now, I don't know what your business is if you're listening to this, so I guess I could start off by saying the best funding strategy really depends on your business model and your growth plans and your timeline, of course. Here's a breakdown. If you want stability, choose debt. The reason being is debt is for smoothing cash flow, building infrastructure, covering your operating expenses, hiring a team, buying inventory, and it keeps your ownership intact. You don't own nobody, just owe your debtor. They don't take a piece of your company. Well, I mean, if you don't pay your debt, well, we won't talk about that, but you know what I'm saying. If you want to scale, choose equity. So equity is for expansion, new markets, acquisitions. Like if you want to buy another company or move into, a different company that you want to partner with, but eventually take over. New product lines, aggressive growth. Equity helps you move fast, but you must vet the partners, just like they're vetting you. So let me also add this with equity investment, and I think that's what a lot of people are complaining about on the internet, talking about VCs and angels and things like that. You have to really understand what you're getting into, and you have to really know your investing partner and understand what their expectations are before you even consider a conversation about equity. Um, Equity is for, like I said, making bigger plays, not just because you need a capital infusion. If you want control, you choose revenue power plays. That is the most no brainer one here. These are internal strategies that give you speed, flexibility, high margins, immediate cash in most instances, and independence. You don't owe anyone any money and you don't give up any ownership. That's ideally what you should be targeting first, is to have that power, the revenue power play. That's what you should focus on first. and then move into the other areas. If you want to keep leverage, choose asset funding. This is how you do this. You buy buildings. I tell people all the time, every entrepreneur should eventually get to a point where they need to buy a property for their business. You open new locations, you launch new divisions, you acquire companies, and you enter capital heavy industries. These assets give you bargaining power. Now, let me say this. There is a story or situation about the slutty vegan, and there is such a thing as too fast of an expansion where you're just buying locations and opening locations and buying buildings and all this other stuff. And I don't know the ins and outs of all of what she went through. Pinky Cole, you can look up. She has a book. She's written her about her own story. But bring that up to say, be careful. It has to be strategic if you're doing asset funding, because you can get in over your head. It ends up losing everything. And we don't want that to happen. Okay. So, how do you become a fundable company? I'm using finger quotes, fundable company. Let me give you some of the criteria that lenders, investors, and partners really care about. The real criteria, not that bullshit you see online. You become fundable when your business has clear financials. That's profit and loss, cash flow, balance sheet, clean, organized, and current. Again, talk to your CPA or your accountant. If you don't have one, Juliana Kennedy, shout out to Juliana, she can help you with that. Predictable revenue, monthly recurring revenue, or at least consistent sales patterns. Investors want to see that. They want to see that you don't have to have the same amount every month, but close within that proximity, not off by like 10, 20% at most. Strong margins. You must show profit, or at least a path to profitability. If you can't show that, nobody's going to want to invest in you. You have to be realistic about that. Documented systems. Investors fund structure, not chaos. If you're flying by the seat of your pants, this is not for you. A capable team. So lenders and investors want to know that you're not alone. And a lot of people like to say, well, it's my business. I've done it. I built it. I will get you a loan. Okay. Make sure you have the right people in place with the right skill sets that make investors feel comfortable. A compelling story. They want to know your why, your market, your mission, your plan, not the whole I started out as a single mom with 3 kids and I was on assistance and I was living in the projects and decided that I wanted to start this beauty brand. No, that is not the compelling story. You have to get in there and make them understand your why. You have to make them understand how you fit into the market and how the market is yours and what makes you exclusively the person to meet that market. And you have to be able to articulate your mission and your plan on how to build this company, how to scale the company. That's really the best thing. They want to know, okay, we know about you, we know what you want to do, we know where you want to go, but how are you going to take it to the next level? That's what they're going to want to know. And then you need a strategy for using the money. Okay, look, Juliana Kennedy, my dear friend, she's a CPA, tax advisor, and accountant. She tells my call, we have a bi weekly call for women. And she tells them if you are going to get funding, you need to know how to allocate the funds, how to spend the funds, and how to track the funds. If you don't have a strategy for this money, they're not going to give it to you. They don't want vibes, they don't want guesses. They want a clear roadmap for how you're going to deploy their money. And when you have these things, the capital becomes accessible and even magnetic. And you show them a path to profitability and a return on their investment. So let's talk about some of the things you should never do. This is like no nonsense. You have to really stick to this. This is things that you shouldn't do if you don't want to sabotage your chances of getting funding. So here are the mistakes that's going to destroy your chances of being funded. Waiting until you're desperate. Now, I said this in another episode that if you are just, I can't make ends meet, I can't make any revenue, I can't get money, and you're desperate to get money, you're not going to get it. Asking for money without a plan, don't do that. Have a plan, just like I said in the previous clip. Make sure that you have a plan and a roadmap to where you're planning to go with this business. Even if you're just guessing, I hate to say it like that, but even if you're just kind of guessing out loud or thinking out loud towards the future, have a plan. Hiding your financial weaknesses, they will seek that out like a bloodhound. Don't try to hide any misgivings about your numbers, anything about any deficits or any issues that you've run up against, because it always comes to light. Not understanding your numbers. You better know how to read your P&L, your financial statements, your all of that. All of it. You need to understand. If you don't know, take a class. There's plenty of free classes out there to help you understand your financials, okay? Your numbers. Lying about revenue. Listen, I've seen plenty. And there's a story that comes to mind. I don't want to put her out there, but there was a young lady who had gotten all this funding, and she was like, I'm making this. I have all these subscribers. I have all these people. She had a Forbes article written about her and everything. And guess what? It was a damn lie. And it was eventually exposed. And she was humiliated, and investors were not happy at all. And some of them, I think, threatened litigation as well. So don't lie about the revenue. If you're pre-revenue, be honest about that. But give them a path and let them know, I plan to be profitable within X amount of time because of these aspects. They want to know that. Not just you saying you're going to be profitable, but let them know why and how. Okay. Mixing personal and business finances. Y'all know better than that. So I don't even have to go into that. You never mix your personal and your business money, ever. Having no operating structure. It can't just be about you. It can't just be, I'm the business. I know everything. No, you have to have a team and a structure in place to make sure that the business is operating soundly. Not being coachable. Ooh, sisters. I know that we feel powerful, and we should, and we tout our abilities. We should, and we've earned our credentials, but we don't know everything. If we knew everything, we wouldn't be seeking funding. So please be coachable. Don't go in there acting like you know it all, or you already heard something, or you can't, nobody can teach you anything. That is the biggest killer of Black women getting funding, because we act like we know it all, and we don't humble ourselves enough. So I'm not saying bow down or be, subservient or anything like that, but what you don't know. Please be coachable, because I've seen many investors pull out because the person was just stubborn and hard headed and didn't want to be coachable. Okay. Pretending you don't need help. Same as not being coachable. Well, not the same, but a little similar. You need the help. Otherwise, you wouldn't be coming to get funding. If you need help, ask for it. Okay. That's point blank. Capital goes to the companies that look ready, not companies that look needy. Always remember that. Okay. So let's talk about the real power move. And this is something I want to leave you with. It's a truth that's out there that you may know or may not know. Real power move is not getting funding. Do y'all remember when I told the story about Techstars, and they had the 6 or 7 companies, and out of all of them, only one of them did not get funding? They took that summer to get out there and refine their business and get customers, and they really focused on customer acquisition, while the other companies all got funding and they got applauded. Ask yourself, where are those companies now? If I can find the clip, I will go ahead and share it on my social media or something. But yeah, it really disappointed me that Techstars was really heavily focused on who got the funding instead of the people that got the lesson and learned how to make the money. Okay. It's becoming a woman who knows how to leverage funding thing. Okay. A woman who understands cost of capital, return on investment, scaling strategy, financial discipline, operational capacity, and risk mitigation. That's the woman who builds enterprises, who creates generational wealth. That's the woman who lenders trust and investors follow. That's the woman who builds like mogul chicks level legacy. Okay. And that's the woman that you want to become. So funding is not out of reach for everyone. You just have to make a couple of adjustments and really, really focus your mind on being that investment ready business. Capital is not the enemy, and scaling is not reserved for the chosen few. So don't believe that for a second. All you need is the right strategy, the right structure, and the right support. And then, you have a business that will grow with you. Not, you won't have one that you have to drag every step of the way, but you'll have one that you'll be able to build that financial power for and with. So I usually don't end my episodes with offers or anything like that, but I have 2 things coming up. Well, I have one thing coming up and one thing that's already out. If you're the DIY type and you don't want to get involved in a course or anything, or any training or anything, you can pick up my book, The Mogul Chicks Guide to Getting VC Funding. That is available on my website. If you go to mogulchicks.com/shop and then look for the book, it's there. Or it's on, I hate to say it, it's on Amazon, but it's also on Barnes and Noble. And the second thing is funding school. So we do a 3-week intensive. I only do this three times a year. And this is something that I do to make sure that everyone who attends is fundable, is funding ready, is investment ready, because there's a lot of loud and wrong information out there about funding, and there's a lot of complaints about it, but not too much out there teaching people how to actually go about getting funding. We only deal with angel investing and VC in this class. We do touch on crowdfunding and loans and things like that, but the core of it is about VC and angel funding. And if you don't know about those, you can look them up on Google and understand what the difference is between the two. And I hope to see you. I have reduced the price to 1,500 for just this year, the beginning of this year of 2026, for this first session, this first offering in January. So January 14th, 2026 is when the next session of Funding School starts. And then we will do them again in the summer and then again next fall. But the price will go back up to $4,500. For right now, it's $1,500 because of the situation that we're in with this economic environment, the political environment, and all of that. I felt like lowering the price for this one time would be enough to get more people in there. And if you feel inclined to pay it forward and pay for someone else to go, that's even better. And I will give a referral fee for anyone who sends people to funding school. But that's my time for today. And I hope that this is giving you something to think about and helps you really reframe the way you look at getting funding for your business. Don't make mistakes that's going to cost you money or that's going to keep you from getting capital investment in your business.
I'm Adrienne Graham, CEO and founder of Mogul Chicks, and this has been another Mogul Chicks Chat. I want to help you build a better, more profitable company. Make sure you check out the other episodes, and if you like what you hear, share the love. Pass the link on to your friends. You can find this podcast wherever podcasts are streamed, and of course on the Mogul Chicks website. Make sure you subscribe, and if you do, leave a comment on any or all of the channels. It helps other people find the podcast too. Sharing is caring. For more information about how we work with you to grow and scale your company, visit us online at mogulchicks.com, send an email to contact@mogulchicks.com, or you can connect with us all over social media at Mogul Chicks. And remember, that's Mogul Chicks with an X. If you're not yet part of the Mogul Circle, if you're doing over $1 million in revenue annually, what are you waiting for? There's so much value in memberships and the community. If you prefer a good program or trying to move beyond startup phase, check out the Mogul Chicks Academy at mogulchicksacademy.com. I'll catch you on the next episode. And remember, Mogul Chicks are always a step ahead of the crowd, and they're always closing deals. Mogul Chicks make mogul moves and power plays. Your move. Now go be profitable. Bye.